Hey guys, it's Chris Cipriani with the Cipriani team, and we're here with
Maria DeRosa of Dominion Lending Centers, FC Funding.
So Maria had a little presentation, I guess you can call it, that she wanted to give me with some things that are changing in the mortgage world. So instead of just meeting in my office and doing it, I thought, let's record this. Any questions I have on the spot, we can get answered, and of course, it'd be good for you guys to all know. I'll let you take it away.
Well, as of yesterday, Bank of Canada, the government has released our new inflation numbers, and they've risen. So May we were at 7.7, and now in June we're 8.1. There's been a softening of the inflation with the rate hike that they announced on July 13th. But inflation still rose. Cost of food is slightly softening, but we're still up. The cost of gas has now increased by 54%. So that's huge when it comes to people.
Was it kind of expected that we were going to see inflation numbers be higher, even after our interest rate hike?
So that brings us to the anticipation that we're probably going to see another rate hike. Probably they're anticipating to bring the overnight rate, which right now is at 2.5. They're anticipating to maybe bring it to 3.25, maybe even higher. So I believe that maybe our next rate hike may be 0.5%. So we'll have 50 bits.
We thought 0.5% last time, and they gave us a full one. Okay.
They shocked us with the 1%.
Yeah. So I guess when we were talking last, you were running some numbers in terms of cash flow. I think you went through and things like that. So kind of explain to me and maybe the people what we're seeing with maybe your monthly payment, buying now as opposed to waiting, or how it was before.
So as we call it, the wait and see. People sometimes hesitate with market increase in rates. They figure, I'm going to stand on the sidelines, just wait and see what's happening. Last year in July, homes were going in Hamilton for about $1 million. Going rate was about 1.89 for 5 years fixed, which was amazing. But those rates were, of course, deflated or reduced due to the pandemic and the Bank of Canada introducing monetary policies to get the market going. Now, let's fast forward to July 1st, 2022. The 5-year fixed rate is 5.09. If we look now at the end of July, we're at 5.49, but the calculations I did were based on 5.09. You're looking at the same mortgage amount of $700,000, so we're going based on a conventional standard mortgage. Your payments will differ from the 1.89% to now the 5.09 to being like $1,227 per month.
More.
Now, the home in July 2021 was $1 million. Now, July 2022, we're looking maybe 5% decrease, 9.
We've seen as high as 20% in some segments.
So on average, that same home here in Hamilton would probably go, would you say maybe $950, $960?
Yeah, for argument's sake, we can say $950, $960 for illustration purposes, sure.
So then we're looking at the mortgage being the same on each example of $700,000. You're going to be paying now an additional $1,227 approximately per month. Let's times that 12 months times 5 years.
Yeah,
that's cost you $73,000.
Yeah,
out of pocket, but you saved $50. So the wait and see cost you money, as opposed to saving you money, because you're now spending more month to month, expense-wise. It takes away from what you think you might be able to afford. So people may stand back and say, okay, $1 million is too much for me to afford, but they see $950 and think it's more affordable. Well, let's look at the rates and what does that do to our cash flow?
So if we talk about even 6 months from now, okay, we're talking another half point interest rate hike, waiting that extra 6 months, because everyone always tells me, oh, it's going to go down, it's going to go down, it's going to crash. The question I always tell people is, okay, if you're going to wait and see, what metric are you using? What are you waiting to see? What are you waiting? Where's that bottom mark that tells you to get in? So if we look at July of last year to this year, you could see the difference in your cash flow. We're waiting of July, oh my God. It's July of this year to maybe December.
We're going to see more rate hikes.
We know
that because inflation has increased. Inflation will probably stay. It'll take a while before we see the effects of the monetary policy to bring down inflation. So the waiting and seeing, yes, you may see a little bit of a decrease in the price of homes, but the cost of waiting...
It's going to keep going up and up and up.
So the sooner you can maybe look at financial advisor or your mortgage specialist and asking for a pre-approval and getting that rate locked in gives you that opportunity to shop over the next couple of months and take advantage of the rates of today, which are still very historically low.
We're seeing houses on the market that, they would have had probably 20, 30, 40 showings in a week or 10 days are getting 4 showings in 30 days. And we're seeing a wide variety of houses just sitting on the market and nobody's looking at them. And I guess my fear for some of my buyers is, okay, if you're going to wait and see, the tipping point is probably not going to be some little metric you're looking at. It's probably going to be a news article that comes out and tells you now's the time to buy and everyone's going to jump in the market. And all of a sudden now you're jumping into the market with a little bit more competition. We're probably not going to go back to the crazy bidding wars of the last 2 years, but you have the opportunity, especially first-time buyers, to actually buy a house that you like. We were seeing first-time buyers getting beat out a million times, and half of those houses they were putting offers in, they didn't really even care for. They just needed to get into the market. Now you're seeing, here's 5 houses, pick the best one, and you can put a finance condition, you can put a home inspection condition, you can really get a property that you're happy with.
The best thing to do is to trust the people that you approach. So if you talk to a mortgage agent, someone who can look at your total financial picture and give you a solid advice of when it's a good time for you to get into the market. Don't listen to the media that may be saying, scare tactics and trying to put the fear or the phobia to get into the market. It's more what's best for you. And how are you going to know that if you don't approach a mortgage specialist and get a true picture of where your financial situation is?
I've seen that again personally with some of my buyers. There's 2 sides of the coin. There's the guys that personally can't jump in the market right now. I got a few people coming from Manitoba or New Brunswick and they're waiting for their job offer here. Might not be till December. Then I have the other side of the wait and see, and some of these people have been waiting and seeing for the last 3 years, and we've seen what's happened there. And then going back to the media side of things, we're now seeing buyers have buyer remorse. Well, just by doing the numbers, someone who bought a couple months ago has bought at a much lower rate and has more cash flow per month to actually live off of than someone buying now.
And they have 5 years. They're going to ride out.
They have 5 years too.
Yes, and they're going to ride out this market wave that we're going through.
Yeah.
Where the Bank of Canada is making adjustments to bring the overnight rate into control with inflation. So with all these rate hikes and the rates maybe reaching 3.25%, 3.5%, we don't believe they'll last there for more than 2 years, the overnight rate will start to get reduced. So anyone who is in a variable mortgage will take advantage of that, but anyone who is in a fixed mortgage will avoid that wave.
They avoid the up and downs and everything. But we've also heard, as recession gets under control, inflation gets under control, or if they use the R word of, recession, that might spur them to stop increasing these rates. But can you see rates stabilize sooner than later, or are you still thinking it's probably going to be a 2-year game?
Most of the experts are saying in the market, they're calling for a mild recession. They're forecasting maybe the end of September into early 2023, and then it's softening as the year goes through. So there is a light at the end of the tunnel.
So what you're saying is the wait and see approach really in the long run is not saving you any money.
No, you need to look at your personal finances. Where are you? Are you able to now get into the market? You need to get the advice of a professional. Someone who can look at, this is what you want from a house in the market, and then from a professional such as myself, as to this is what you can afford comfortably, and then make your own decision.
So the last question I had just popped up. I'm seeing people for pre-approvals, and I've heard the banks wanting them to requalify. So I've had people who've pre-approved for a mortgage, they buy a house, it's closing in 2 months, all of a sudden the bank is asking them to requalify. Have you seen that happening a lot, or more one-off situations?
It depends. It is more one-off. So it all depends on what rate hold did you receive. Did you receive a rate hold on a fixed rate? Well, you're fine. So that stays in place till the 120 days or 90 days has expired. If it's a variable rate, variable rates have changed. So now if you've received your pre-approval, let's say June, and you were at 3.7 minus your discount, and then the benchmark was slightly different. Now we're at 4.7.
I see.
And they use 4.7 plus 2. So you would be being pre-approved now at the 6 point.
I think that answered quite good amount of questions on what's happening with the market. And if you have any questions at all, feel free to reach out to us. Feel free to reach out to Maria. We'll put her contact information as well. And thanks so much for coming in.
Thank you for having me. It was
answering
a
all
pleasure.
these questions.
Yeah.
Thanks so much.